Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, July 24th, 2020. It's just after noon Eastern Time as I'm starting the video. And what we're going to do here, second video today, I've covered quite a bit. I've covered the semis, some things that are going on there, tech sector. We're going to look at several different, some sectors and or commodities that stand out to me right now as trading ops. Now, most of these, not all, but most of these trades are contingent upon each other. And what I mean by that is, in case for a correction, a substantial, a swing tradable correction, not a 3, 4, 5, 6, 7% pullback, but something much more, possibly even the end of a bear market rally. That's mounting, but we're still not there. And again, I covered that before. A few things need to happen. But what I want to say is I'm going to go through here. We're going to look at the stock market briefly because I covered that quite a bit recently. I want to look at some metals, both the precious metals, gold, silver, as well as some industrial metals, copper, lithium. Quick update there. And then I'm going to roll into just a couple, touch on the sectors again that I think have the most bang for their buck, or at least stand out, is some shorting ops here, and that's going to be the semis, biotechs, and the VIX. So we'll look at those. And again, the VIX isn't really a sector, but it's almost an inverse to the market. If you're going to bet the market's going down, you can short SPY, or you can go long the VIX. You get the call right, you usually get more bang for your buck on VIX. It tends to move up in percentage terms a lot more than the stock market falls in percentage terms. So one way to look at that is, and I often talk about, for example, trading the gold miners, the mining stocks, as simply a leveraged trade on gold, because although the GDX is not leveraged, or Barrick Gold is not leveraged per se, it will move up and down more than gold will during a bull or bear trend. And the same holds true for the VIX when the stock market corrects. So let's get into that. Stock market, the simple case, it's been building for a while. We're still starting to get some early cracks, some potential sell signals now, and that's again why I'm doing the video, and that's also why you'll note some more frequent updates that tend to work. If the market's grinding around the trading range, you're not going to get very frequent updates from me. There's not a lot new to report. Recently we put in first divergent high once we took out this previous high over here. The island cluster is really no longer a topping pattern or potential topping pattern because we took it out. But what we managed to do at the same time, we put in our first divergent high since back in late February, which preceded a 36% drop. And now, as of today, we've broken the uptrend line off the March lows. You can see right here. Zoom in a little tighter. Boom, there it is. Is it questionable because of FANG earnings? Yeah, but it is what it is, and already we're starting to see, Intel. I often call the six FAMI. I call it the FAMI stocks, FAAMGI sometimes, because that was until recently the sixth largest, only recently taken over by Tesla, which is oh my gosh, the short potential on Tesla when that one cracks, and I think it probably already has topped. Wow, a lot of downside there as well, so maybe I'll hit on that one. Just kind of going off on a tangent here as I do this. So that's it. Sell signal there, but we still have support at 318.30. As I said earlier, I think it's time to start scaling in, start taking short positions. If you're the same mindset that I am, that we're looking at most likely very near, or if not already at the start of the first decent drop in the market in months here. All right, so that's what it looks like on SPY. I went over QQQ today. QQQ, I did this in an earlier video, coming down to test support on both the NQ futures, which I already covered. We hit my next target there today at the lows, bounced from there. So far good for almost a 2% reversal. And we need to take out, as I've been saying for a while, that July 14th low, Tuesday, July 14th. But we are, of course, flirting with right now the uptrend line on QQQ. I have that one drawn a little bit different. I have the uptrend line on QQQ coming off the lows of April 7th right there. So that's kind of bigger picture stuff. Early cracks, not all in short stuff, but unless you're aggressive, and just manage your stops in case it proves to be another whipsaw in a long line of whipsaws over the past few months. All right, other trade ideas. Since I'm on the market, let me jump over to VIX, then I'll get to the metals. So our beloved TVIX is now gone. Rest in peace. Like so many leveraged ETNs and ETFs since the big drop back in March due to the initial COVID fears. A lot of ETNs and ETFs, especially those using leverage, have gone to the wayside now. So VXX has always been around, still is, and it tracks the short-term VIX futures. Let me just say that quick. Pay attention. No, if you're going to trade anything, read the prospectus. You don't have to read the entire prospectus. Not a bad idea, but you can go to the website and find out what that what ETF or ETM, what are they doing? Because the VIX, I get this question all the time. The VIX is the spot index. It's the CBOE market volatility index. It shows volatility in the markets. A measure. You can again look this up. They'll give you the formula. It has to do with put buying versus call buying and all that kind of stuff. And it for the most part, it doesn't mirror the stock market perfectly, but it does all these sharp rallies are when the stock market corrects or went to bear markets. And what happens, it's nice because as volatility is going down, that's typically when the market's rising, and then the VIX will drop as well. And so what happens at the same time, you get the negative divergence, all those divergent highs and lows that I pointed out over the years in the stock market and the S&P 500, you're going to see the inverse, or the opposite of it here on the VIX. So usually when you get these divergent lows on the VIX or the divergent highs, which say, hey, the stock market is now putting in a divergent low, not always, but usually, those are your clues to the big trends in the market. And it's pretty clear stuff. You can see them all marked here. Going back, again, we're looking at the spot VIX. Going off on a little bit of a tangent. I'm going to get back to VXX in a second. Divergent low, divergent low. You can see the rallies, divergent low. That was a divergent low. I should have the words right there. There was a divergent low there and there. Divergent low there. Some bigger than others. Trendline breaks in which to trigger objective long entries, and back tests, same thing. So this is really like trading any other stock index sector. Again, it's going to work almost inversely to the stock market. So where are we at now? Why did I bring it up? Well, we've come full circle. There it is. There's our latest divergent low. Right there's your positive divergence. See, you had a downtrend line here, and I highlighted it back then when we fell to the 25.58 support before. We got a pop. We fell down to support. That line was there in advance. It was highlighted at the time. And, it's not arbitrary. It's a lot of reactions along that level. And so here we are. We're at it again. We went a hair below it, but we're trading back above it. And what I can do now is even put in a smaller downtrend line and say, here's a little wedge. We popped the first time, but we didn't have the divergence. If we did, maybe, we had small divergence, at least there on the PPO. Now we have even bigger divergence, and that sets the stage for an even bigger pop. So no guarantees it'll work out, and we don't have our buy signal yet. You need to pop that downtrend line, but if we do, and again, it meshes with what appears to me to be the outlook for the stock market. The stock market looks poised for the next correction, and VIX looks poised for the next rally. And that would be that's not a hard target. It's pretty thin air up here. You see not a lot of reactions. We had this big spike, extreme high during COVID. So let's just call that a rough target on the VIX. But here's the thing, as I was getting at before when I was on VXX. You can't buy the VIX. You can't trade the VIX directly. You have a couple options. You can buy futures on the VIX, and just like stock futures, you have near month, then longer term, intermediate term, a little bit longer term, several months out, and that's what the different VIX tracking ETNs use. So where I was going with all that is you're going to see day to day the VIX, which you cannot buy directly, and those VIX tracking ETNs, you're going to have different numbers, and that is a reflective of, are they bidding up the short-term VIX futures? If so, that's what's going to cause VXX to ride. Or are they bidding up the medium term? I think that's VXN. I'll get to that in a second. So they have different futures that the different ETNs are tracking. However, if that target up there, rough target, about 49.74 is hit, that's about a 73% return. And again, the case right now that I'm making for going long volatility, same case I made back here a couple months ago, fall back to support with positive divergence in place, and most importantly, the charts in the indexes align. In other words, if I can't make a pretty decent case to short the broad stock market, the S&P 500, QQQ, then regardless of what I see in the charts of the VIX, I'm not going to take it. VIX can be tough enough to trade. You want to align it when you go long. You want to go long when the stock market looks like it's poised to correct. So there it is. That's one of the trade ideas for you. VXX is, again, tracks short-term futures. And same thing, the chart's not going to be exactly the same because it's not the same instrument. But you can see I have a pretty decent support line there, about 26.37. Yes, we are above it a little bit, but I showed you a minute ago the spot fix is at support, or hair below it. And we'll call this a support zone anyways, between 31 and 26 and change. And there's your downtrend line, nice and clean. There's your divergent low, positive divergence. Watch, rinse, repeat stuff. Last time we had a divergent low, going long the VIX at that divergent low, or shortly after the breakout, you deduct a little, 486% return. Time before that, we had positive divergence right there. Little correction in the stock market, wasn't maybe a whole lot, but it was enough to give you a 43% return in just a few weeks on the VIX. That was double digits, etc., etc., etc. Go back here. Same thing. Draw a beautiful little bullish falling wedge. Confirm that wedge with positive divergence, and again you can see if I can get that divergence line straight. There's your buy signal, your breakout. Good from, if you took the breakout, was good for a 76% return. Okay, so there's one trade idea for you. A lot of bang for your buck. Finally, and let me leave it at this, that cuts both ways. Anything that can go up 30, 40, 50, 70, 100% in a matter of weeks can also drop a lot and can drop fast. So don't get married to it if it goes against you. You know, Fed comes in with another bomb on the market, anything's possible. Personally, I don't trade around what the Fed may or may not do, because you'll second guess yourself out of every single trade. Trade the charts as they are. And then of course, like I said, there's other VIX. That one's the NASDAQ Volatility Index right there, VXN. All right, let me get back to some other trade ideas. So where I was going earlier in the video is that one's going to be contingent. VXX isn't going to go up and break out and rally much up. That would be my first target there, about 43. That would be I shouldn't say first target. I'll give you a shallow target. I know some people don't like to swing for the fences. They want to hit singles and doubles. 35.68 or so, give or take. These are unofficial targets. All that means is it's the actual resistance level. You might want to cover just a hair below that or sell it. That's 14% return if that target's hit. If the $43 levels hit, that's 38%. And if that 50, 70 current max targets hit, that's about 62%. And like I said, that would be contingent. The VIX isn't going to get up there if the stock market doesn't drop. So if you bet on one, you bet on both, then it's the same bet really. You're just going to make or lose more on this one than you will on the S&P 500. All right, next up, one that I haven't mentioned recently, but I've been keeping an eye on are the biotechs. And again, this is going to move there's a lot of biotechs in the NASDAQ as well. So if the Qs break down, that's probably going to help this one. And we do have a sell signal recently on XBI. You can see kind of same thing, wash, rinse, repeat stuff. Look for these divergent highs or wedges, breakdown. And that was good for this drop here. We even put an equal, slightly higher high. You could have shorted there, held it all the way down to here, or added on there. Just like you get these divergent lows, you get these rallies, and here we are. So we have what stands out to me on this chart. I know there's a lot of levels marked. Here's our primary uptrend line right here, off the March lows. There's our divergence line that forms a bearish rising wedge pattern. Negative divergence. That shows best right there. It's about flat line all the way across there from this point. And again, it's the first time, just like the stock market, the broad market, that we've had negative divergence since the peak back there in late February, early March that led to this drop. So similar technicals, actually not similar, much bigger pattern here. And this tells me there's the potential for even more downside than what we have there. The potential. First things first, there's your first target here on XBI, about 108, call it about 108. 97.90 would be the second target, and at this point in time, max target, again at this point in time, that could change, 92.81. I think this one has a good shot of being hit. if we continue to get more downside, especially if we take out that 108 level. And that's a pretty good size drop, and you can also, not that you should unless you know what you're doing, but you can juice this one up by using LABD. Let's see, LABD is the 3-time bearish biotech. Now I mentioned this LABD and I used XBI because it tracks the same biotech index. Just like I talked about how SOXX tracks SOXS, or the same index as SOXS and SOXL, the bullish 3-time long. XBI tracks LABU, 3-time bearish, same index, and LABD. So you can use the same charts. You're going to get decay on these 3-time charts, so they're longer term. It's not going to mirror XBI, but again, it is the same index, the S&P Biotech Index. And I say that because there's other biotech ETFs out there like IBB and PBE. They track biotech stocks. They're going to look similar, but they hold a different basket of stocks with different weightings. But there it is. You can see the same wedge type pattern breakdown. And so there's one of a sector that stands out to me as an attractive swing shorting up. All right, next up would be, I already mentioned SOXX in previous video, starting to break down a la Intel. What I might not have mentioned earlier today, if I didn't, is also the divergence. I do look at volume. You don't always see it on my charts because it's usually colored down, but there's the volume bars, and you can see when you look at SOXX, semis, this advance that we've had has been on declining volume, and that usually it confirms. You have the negative divergence on the RSI, on the PPO, that shows waning momentum, and what you can see the divergence on the volume with the biotechs rising on lower and lower volume, and that's typically a sign that rally's running out of steam, fewer and fewer buyers in there, and so divergence across the board. Sell signal today on the breakdown. Look a lot better if we take out the 270.68 level. Okay, next up, precious metals. So these are not as tied into what happens in the stock market. In fact, quite often gold rallies when the stock market's correcting. However, that hasn't been the case yet. I talk about it quite often. If you go back 20 years, and I've done it many times on this site and videos and static chart images I posted, show you a very, pretty clear, fairly regular inverse relationship, because gold tends to be a risk off or flight to safety asset when the stock market corrects, but not always. Sometimes they get sold together. So you have to be aware of that relationship and know that it's not completely inverse. In other words, stock market drops 20%, I guarantee you the VIX goes up. Stock market drops 20%, sometimes gold drops that much, sometimes it goes up. So just want to kind of point that out, that and lately, for a while now, they both, gold and the stock market, for the most part, have been rising. So they're both in, at least off the March lows in bull trends. Here's gold off the March lows right there. All right, so what's going on in gold? I mentioned recently we've been long gold for a long time as a swing trade and a long-term trend trade. Recently booked profits on it. It's carried a little higher since then because it went through a little bit my long-term target, but I'm going to show you what I'm watching. Same thing really. I highlighted this trend line here. Same thing on GC. I have an uptrend line on gold futures that I showed you recently. I'm waiting to see break. We're kind of going, it looks like a little parabolic or blow off top here. You see this straight advance, that usually doesn't end well. You usually don't see that and then this and then that, or just a continuation of that. You see this, you usually get that quick drop. We tried push up again and a bigger drop. You saw a very sharp advance right there. It didn't last long. We didn't fall hard, but we went in a multi-month sideways consolidation range. You saw a quick spurt up there, and again, gold stalled out for quite a while. So you get these little spurts within a bull market, and you either tend to consolidate or correct. And at this point, like I said, we have negative divergence still potential. That's what I mentioned recently. It was back here. I said it was unconfirmed divergence, and it's still that. I had to just, since the video today, I took the line up because the indicators are still making lower highs. There's a potential they take out that if I'll have to delete this if this PPO and the RSI move up above that previous high there, then you won't have the divergence anymore. Long-term chart. This was going back for many months, even I guess a couple of years. This was my long-term target, and what I called my initial bull market target, because that is the top, not the very top of the last bull market in gold from 2011, but after the top was in. We had 3 failures around that 174 level, and so we hit it recently. We went on through there, but let's see how we finish the week. This is a weekly candlestick here. Let's see how we finish the week. If we finish, my guess is we're going to probably pull back in soon, whether it's this week or next, come back on and even below that line right there. So again, cautiously bearish on gold, but when I say that we don't have the sell signals yet, the mining stocks, I'm going to show you some of those today that really look, especially some of the silver miners, really look poised to provide some nice returns if we get the sell signals I'm looking for. So those are the criteria I'm looking at. The break mainly on the daily chart and this 60-minute chart of gold. I've been posting this. There's charts of this on the home page for last a week or so here, saying this is a trend line we need to take out, but we have a minor trend line which is now even better defined. So the other day I added this one. I think that's going to do the trick. At the very least, it should do the trick to take us back to this trend line. You can see the divergence continuing to build as we wedge up higher. Here's your divergence lines, and I still think ultimately, whether we get a reaction now on this trend line or not, maybe a little one, I still think we come down here to at least that 1870, 17 level, and quite likely 1790. So this is a target zone. We'll call that TZ, target zone right there. And if it happens, and depending on how it happens, this is how you have to integrate the shorter term charts with the longer term charts. What would this look like here? What we'd see is a false breakout above those previous highs from back in 2012 or so, and you'd see this candle, whether it's green or red, you'd see it close back on or below that 174-ish level. Again, weekly chart, but that's about where we're at. So that's what I'm looking at, and there's a potential for even to keep the bull market intact. There's been a few pretty decent tradable pullbacks along the way in the bull market here. This is all, there's your bull market low right here. That's where it started. That's where gold bottomed late 2015. So longer term, I'm still bullish on gold. That was an initial long-term target, bull market target, but I think we can come all the way back down here and quite likely to this trend line right here. I think that would be a great, or a potential, let me just say, a potential swing target right now for gold. We don't have many reactions. In fact, we only have a couple, so we'd have to have a reaction on it again. We'll just have to see how things play out. If that were to happen, you could be looking at gold coming back in. Take a while to get there, but maybe 20% or so. And if it happened, like I said, it's not going to really, if it stops there and reverses, still be in a bull market. That'll just be a pretty healthy correction within an ongoing bull market. And here's a bull market right here. Here's a drop of 30.31% in gold, and it was within the bull market. The bull market continued, and so it's not unheard of to see a 20% drop correction within an ongoing larger bull market. I just flipped over to silver, but I also want to just say I can't rule out, and again, that's why I try to make a difference between a potential setup and things that need to happen to get that sell signal. I can't rule out some kind of big blow off top here, or just another strong advance, like this right here. Just a continuation of the uptrend. Look at this uptrend. It went. There were little corrections along the way, but we just kept moving up, up, up. I don't know. I can't really put that clean of a trend line in there. I don't want to force it, but it's probably be something along those lines. So again, I can't rule that out. And if you're long-term bullish on gold, you might just want to watch those levels that I pointed out a minute ago that I'm looking for sell signals to short, and use those maybe to control your, manage your position, maybe some stops a little bit below those levels if we get those breakdowns. Silver. Silver recently broke. The whole big run up lately was technically induced. Whether there was news or not wouldn't surprise me, but this was a big level. I've had this one on the chart for a while, 1758, and it's really a multi-year basing range trading pattern going all the way back here to 2014. That's when we entered that. We had one brief breakout there and one brief whipsaw to the bottom during the meltdown. That was for selling liquidation. There's an example where gold and silver were falling along with the stock market because everything was getting sold. Margin calls were being hit. forced liquidations, things like that. So it doesn't matter how good the fundamentals or the prospects are on something during a forced, a meltdown in the financial markets. That's when just about everything gets sold. All right, so that's it. It broke the 1758 resistance level, big level, and then boom, in one fell swoop. And I talk about this often. That's like a coiled spring. Now, I thought we'd get rejected there, but the fact we took it out, it shows you how, that's that energy building like a coiled spring for years. And so when that level was taken out, which was last week, and then with the follow through this week, once they saw that 1760-ish level was in the rearview mirror, boom, they rallied it up. However, what it did, it ran right into resistance and has potential divergence resistance around 21, call it 2072 or whatever. Potential divergence there if we turn down from here. If we go much higher, the divergence will be burned through. And if we do, there's my next target there. Silver, I think, started a bull market here with this divergent low. 2383 is next long-term target, more of a target zone up to about 2540. Is that possible? Yes. Is it likely? No. In my opinion, we come back down, test this, back test the top of that trading range. If so, you're talking in silver, that's a pullback of about 17% or so. And let me show you one other thing, and then we'll look at some individual mining stock ideas. This is the gold-silver ratio. So what I've done is it just charted, gold and silver together here. Let me make a darker trend line color here. And you can see you have these uptrends. I'm going to go to a longer-term chart. Back, for example, and this is, I must have posted this on the site back on July 9th. These are old notes. It said for the next leg up, I think there's a decent chance that silver might outperform gold. At the very least, some of the silver miners, such as these guys here, look poised for some very profitable trend trades. And from there, we got gold rallied from that point 11%, and silver did 3 times that, went up 34%. This is silver down below, guys, by the way, and gold right here. And this is the gold to silver ratio. So when this is dropping, as it did, I was predicting that silver would outperform gold. That's why it's a gold underperforms silver. And lately, with that breakout in silver, first gold was outperforming, and now silver. This is silver playing a game of catch-up. Remember, when this is dropping, gold is underperforming silver. So that's that breakout that just happened on silver. I showed you on the weekly chart. Now, what did it do? Let me show you the next chart. So same chart, but a little bit longer term. Here's the gold to silver ratio. Let me make this a little bigger. Okay, here we go. It's the same chart. Longer term, same thing. Gold silver ratio, weekly chart, going back over 20 years. We're going back to the late 90s right here. And you can see a couple things. The ratio tends to work. You can put in these trend lines, and you break out. Remember, when the ratio breaks out, this is gold outperforming silver. You can see that silver is dropping. And remember, both could be falling. One could be rising, one could be falling. It's just gold outperforming silver on a relative basis. And again, these trend lines work well, to find out when that ratio may flip, and therefore you have an opportunity. Now you can do either an arbitrage trade or hedge trade where maybe you're long one, short the other, or you want to focus your efforts on whichever one looks stronger. In other words, a few months back when I said silver is poised to outperform, well, make more sense to go long silver than gold, or long the silver miners than the gold miners. Again, nice clean trend lines. You get the breaks, you get the change, and those are your opportunities. So what happened is, recently, first gold vastly outperformed silver. Really, silver was underperforming. You can see it down on the chart below. There's the underperformance in silver right there. And then silver played its usual game of catch-up, and it was just really a mean reversion. And what I think has happened here, it took out the trend line. So you might say, well, Randy, that's a sell signal, right? Yeah, I mean, it is on face value, but when you got so far away, I think this is a mean reversion and a momentum-fueled overshoot. Silver had so much upside momentum, I think it carried through. And on top of that, more importantly, see these two horizontal lines right here? That's a support zone right there. That's a pretty decent support zone. Why? Well, we have a major reaction high in the ratio back in 2000 and late 02, early 03. Another one back in 2008. Another one back in 2016. Danced around it here. So at this point, I think that the gap's going to close. Where do they go? Where do they bounce? I think I think we'll get a bounce here. I think silver is poised to correct either more so than gold, or at least stall out with gold continuing to rise. In other words, I expect gold to outperform silver. Now, again, that can manifest in one of several ways, like I just said. Maybe silver doesn't drop, but gold continues to go up. Silver just kind of trades where it's at on resistance. That would be one way. Or silver corrects. Whether gold corrects or not, silver goes down and gold just goes down less, or gold continues, or gold goes up. Those are the ways that silver can outperform. Now let me show you and wrap the video up. I think there's a couple other things I want to talk on the metals, but let me show you a few silver mining stocks that I think would outperform if that does happen. If we get those sell signals in silver, which I didn't even, let me get to that real. Yeah, what I've been watching, remember, I want to see gold break too. It's going to help tremendously. Silver, I was watching this uptrend line, which I did get a sell signal, but I talked on it the other day. It wasn't convincing, and gold hasn't yet to break. Gold's on the trend line. Here's what I think is going to happen soon. Gold will break the trend line I just showed you on the 60-minute chart, the steep trend line that it's on right now. And what does, silver will break this level. If that happens, if you get the breakdown in gold, you get the breakdown in silver below 22.56 right here, this recent consolidation area. This breakdown, remember, silver's gone kind of nowhere since the breakdown, should play out. And I'm looking for a pretty swift move back down in silver. Swift is in. If you wait till, you wait a few days, you might have missed most or all of it. That's what I expect, right or wrong. And I'm targeting this area here, this trend line, and this support zone about 19,835 to 18,878. So you can trade silver futures. I can't rule out another thrust up, and if it does, I'm still going to stick on this one. I'm going to watch it. It would look like this, no matter what silver does anytime soon. Now, I'm not talking 3 months from now or a year from now, but in the coming days to weeks, if it happens to make a new high here, it's going to have sharp divergence. These indicators are severely lagging, and there's no way silver is going to pop anytime soon to a new high without steep divergence. So if we don't get my sell signal now, or if I get a little whipsaw and it runs up there, I'll be watching it for another potential short up there, and even a bigger drop at that point in time. Some of the individual stocks that stand out. This might be listed as gold, but it's heavy. They do a lot. Remember, keep in mind, a lot of the components in GDX, called the Gold Miners ETF, they also pull silver out of the ground. If you're mining an area where there's both, you're going to pull out silver, gold. But these are the ones that tend to have a pretty good, at least historically have. I haven't updated this list in a while, but they have a pretty good production of silver, and tend to be more of at least used to more silver miners than gold. Again, I don't know. I haven't researched any of these fundamentally in a while. Just looking at the charts, these are stocks I've traded on and off over the years. And this one is WPM, wheat and precious metals. Nice, clean little bearish rising wedge, clean trend line in which to trigger a short entry. You had a nice clean uptrend line here. That was good for once it broke. That was a good 23% pullback. These miners, especially the silver miners, move fast when they go. So there's your trend line right there, your wedge. There's your negative divergence. It is not yet confirmed. Silver's in an uptrend, and so are the miners. What is confirmed divergence? When the PPO crosses down, makes a bearish crossover, puts in a lower low below the previous low while prices have a higher high. Targets, I don't even have one at this time, and I don't want to spend too much time in the video doing that. If we get some sell signals, I'll follow up. Some of these have levels. Here's SIL, Silver Miners ETF. If you don't want to mess around with the individual miners, you can short SIL. It has a basket of silver mining stocks, negative potential divergence, and I probably should have jumped over to the weekly chart on WPM. Let me do that. Yeah, WPM is just poking its head above that previous high back in 2011. It already checked it once, so it could keep going. That's the thing about it, and it could burn through the divergences. If this was the initial tag of that level, I'd feel a little more confident. However, based on my analysis, I think silver will reverse soon, and if so, we'll probably see PM pull back, and that will be a false breakout. Where does it go? I mean, weekly chart, it could come all the way back down here. There's a reaction low there. Again, I don't want to spend too much time on targets now. It'll make the video longer than it needs to be. MAG, this is a weekly chart. I'm going to flip over to the daily in a second. MAG silver, this is a big level, about $18. It's never been able to surmount the $18 level. One day, will it? Probably. But will it do so after following a Let me measure it out here. A rally of 360%. I doubt it. Usually breakouts that occur with overbought conditions tend not to stick, even if you get the breakout. So best case scenario for this stock would be a correction, some healthy consolidation, and then ultimately go on to breakout above 18. Then I might look at it as a long entry. Daily chart. There's a trend line. There's your divergence, potential divergence, overbought on the daily. We don't have RSI divergence, but we do have potential PPO divergence. That was our last divergent high right there. And you can see that marked a major top before all is said and done. That divergence played out to the tune of about a 72% drop. And I could probably actually, I could probably extend that trend line down here somewhere along there. Next up, got a couple more. EXK, I don't know. I didn't have that one flagged. Let's see. No, that's bullish. It took that level out, that 316 level. So that one wasn't flagged. That's not one I wanted to share. SLVP is another ETF. It's the Global Silver Miners ETF. Look at this wedge right here. And I must have, yep, there it is. I have a resistance right here. That's that reaction high back from 2016. Rallied right into that, about $17. No sell signals yet. Break of the trend line would be your sell signal. That's silver, that's the sector. PAAS, Pan American Silver Corp. There's a nice clean trend line. Here's your divergence, negative divergence right on it. And that's from this point to here, there's a little wedge pattern. And there's some potential targets for that one. You can see 30, 40, and then $26 or so. And finally, a couple more. ASM, negative divergence here on the daily chart. Let's see if there's anything on the weekly. Yep. Right into resistance, 112 on the weekly chart. So overbought rally into resistance. That makes that an objective short now and or on a break of that trend line on the daily. FSM, Fortuna Silver Mines, negative divergence on the indicators, at least on the PPO here. Overbought on the RSI, almost divergence, about a flat line. Cluster candles up there, maybe island top if we get a gap down soon. And tighten that trend line up a little bit there for you. And then finally AG. AG, let's see why I flagged this one. Must be on the weekly. Yeah, there it is. There was a breakout back there. See, you can see bullish and bearish stuff in these guys. Look for these big divergent lows. This one right here, and I believe that was pointed out at the time. That was good for a rally in this stock. These things can run, these silver miners. That was 650% return in just over, what, not even 6 months? Half a year. So when these stocks run, they can really run, and when they fall, they can really fall. From there, once it broke that steep uptrend line, it dropped in a matter of just weeks. It dropped 56%, and before all is said and done, not even counting the March lows, just to this low right here, it dropped about 75%. So the point of this is I'm showing you trade ideas that have above average gain and loss potential. I say gain loss potential because if they go against you, if you short this stock because you think it can't go up anymore, I can tell you at times when it wants to run, it can. Likewise, if you're long and you don't control your stops, you can lose a lot of money on this in short order. So I'm looking at this again, as I just made the case on a lot of these, as potential swing short candidates. And based on the returns that you can see back here that I just showed you, we're talking well into the double digits. I'm not talking 5, 6, 7% on these guys. If I catch a trend in these, it's usually high double digits, sometimes triple digit returns on these individual miners. And finally, copper. Copper, I told you a couple weeks back, I'm watching, I think it's setting up for a short. I think copper got ahead of itself. This is the whole, and silver. I think the big run in silver recently was people finally just capitulating to this whole, dichotomy between what's really going on in the economy. Sure, there's been a bounce back off the March lows. A lot of lockdowns lifted, but we're still on a lot of the indicators on recessionary measures. The economic indicators. Yet the stock market, at least tech, is not the stock market, but tech's been blasting new highs. Oil's been holding up. So you finally saw a lot of these industrial metals saying, well, heck, if the stock market's saying the economy is growing and going to continue to grow, then so should the industrial metals. And I think that trade got ahead of itself. First of all, I don't think we're looking at rosy times ahead. It's just me. But I can tell you that copper rallied into a pretty decent resistance level here, about 18. It's walking an uptrend line, so if it falls back below 18 and that trend line, there's a sell signal, and I think it comes back here at about 1643. And then the other one, lithium. Was very bullish on lithium back here, and a lot of lithium stocks laid some setups out. But I think lithium's now run its course. Negative divergence. This is a divergent high. Trend line just broke trend line support today. It's got a bigger level coming up around 34. That's big support. If it breaks much below that, that's that previous reaction high. A lot of reaction highs in there. It's going lower. The divergence tells me that this rally has most likely run its course. Some of my top picks back earlier in the year, I highlighted this one. LTUM, did a couple videos covering this one, and it hit my final target. That's the target I had laid out way back here. I believe it was. You can look at the, pull it up on the post by ticker sign under the resources page at the bottom. I think that target was laid out in advance, and this was a breakout point. I highlighted as a breakout above this downtrend line, and before all said and done, the stock rallied 344% to hit that target, and it did so recently. So number one, it hit my final target. Number two, did it with negative divergence in place, and so again, I think the end of the run, at least for the time being, is there in the lithium stocks. Another one that I highlighted was, let's see here, LIACF. This was one of my favorites back here. And this one didn't even make a new low in March. I mean, the technicals on this were perfect. I highlighted this one as a breakout above either this down, I think it was this downtrend line and or that 948 level. And from there, this stock has rallied an impressive 2,550%. Yep, that's correct. 2,550% run. And it did so with just very nice technicals all along. Now, I didn't stay on this one. I didn't catch all of that run, but you can see right here for the March highs, after the initial run up, it put in a bearish rising wedge with negative divergence. So the same case, it was made to go long on the divergent low, and then the breakout above the downtrend line, you had a divergent high, and it had a heck of a correction, as most things did. But this one pulled right back to the breakout point, offering another objective long, and that's where, shame on me, it fell off my radar. That would have been a nice re-entry point, again, to catch most of that 3,000 whatever percent run. And it actually overshot. I think this was my final target, about 882, and it's a penny stock, low risk. That's why it went up. You're not going to see a big mega cap stock run up 2,000, 2,500% in a matter of months, but these little penny stocks can. And like I said at the time, when I do these videos, and what I probably said back then, I like to take a shotgun approach. These are aggressive, speculative, especially with penny stocks. What does that mean? I sprinkle little bits. If I want to put whatever your number is, whether it's $1,000 or $100,000, do you want to put in the sector? So I do these videos, and I covered, back then, a basket of at least a half dozen or a dozen of these individual lithium stocks plus the ETF. And then you sprinkle little bits, and you would put a little less into a very low price one like this. So it's not like you would have or should have put your entire portfolio or even a big chunk of it in here, but it doesn't take a lot of money, to when you get a 2,500% return, to make it worth your while. And but at this point in time, the whole point is this thing's gone parabolic. I can't even draw on a regular uptrend line. I don't have a sloping line tool, but this is our trend line here. It's a parabolic line, and parabolic runs usually don't end well. This one's probably going to come back in soon with the sector. All right, we're going to wrap it up here. Long video, but lots of stocks. And again, common theme is a lot of these tie in together. The lithium stocks are probably going to correct if the stock market corrects. Then you see Tesla fall, because that's in the it's in my basket of lithium stocks. It's not a pure play, but it is considered in that group. And from a technical perspective, it's traded very well to the technicals. I didn't foresee this big of a run, but I've been pointing out this level right here for a while is a well-defined trading range. Especially you can see it on the weekly chart. Tesla has traded for years in these boxes, in these trading ranges. First that one, then it broke above it, and it traded in that next box right there very well. Then it broke that box, and most of these highlighted back at the time, and entered the back into the old trading range, fell to that support level, From there, rallied back up into the top and finally broke out. And when it broke out of the that multi-year trading range there, it did a almost perfect back test. I mean, there's a lot of volatility momentum, but you can see, so boom, breakout, back test, and went up. Now, where we're at, we've come full circle. This is probably one of the best, of the, especially of mega large cap stocks. Remember, this one's now, if I'm not mistaken, the 6th largest stock in the NASDAQ 100. The market cap is swollen to almost $290 billion on Tesla. Talk about a bubble of a stock right there. A crowd favorite. Just too many retail traders and everyone else piling into this one. There's your big negative divergence. So a lot of downside on Tesla. I don't want minimum target. I think it's that previous reaction high around 985. Kind of give you an idea how much that would be. Even from where we're at now. Let's not even play the game of the highs. From right now, we're talking about a drop of another 31%. And what do we need? Well, here's a trend line. There's a little wedge pattern. We need to break that. But it looks toppy to me. We put in a bearish engulfing candle yesterday. We followed through red candle today. Negative divergence. I think there's one based on everything that I've covered today recently. Semis breaking down, Apple breaking down. Poor things. I think you can start a position here. Just know that it's volatile. This thing goes up and down 10-15% or more a day. So if that is not your cup of tea, if you're not going to be happy waking up to a 15% gap against your position, either find another stock or take a very small position size if you're going to take it at all. As far as options, don't ask me about it. That's not my thing. And last time I did glance some of these when it was right here. That day was high. I was looking to maybe buy a small put position in an IRA. They were so ungodly expensive that you have to be 500% right on your call. In other words, that's the thing. When you have a huge premium into the options, if you're looking to buy the, let's say let's pullback target 945, and you buy the 945 strikes, a couple months out, you're paying so much for it that even if it gets there, you're not going to make any money. It has to go way beyond that to make up the huge premium embedded into these, and that's because options traders. You have the two groups. You have the professionals and the retail crowd. The professionals of smart money typically sell options, and they're not stupid. They're not going to sell when Tesla's trading at $1,800, they're not going to sell you a 1,000 put for without a huge premium in there, because they're a big risk too. So like I said, I think the only way to go on that one's in my opinion, unless you use complex option strategies, you know what you're doing, straddles, all those kind of combination strategies, I think you just short it and a stop somewhat above that bearish engulfing candle, yesterday's bearish engulfing candle. It shouldn't take that out ideally for the bearish case, that is. And then that would be an initial target right there, 945 or so. And other potential targets, 680, and maybe all the way back down again to the top of that trading range, 390. That will most likely entail probably a big leg down in the market, which is certainly a possibility at this point in time. All right, I'm going to wrap it up here, get the video out to you guys. It's been a long one, but like I said, I just want to get these trade ideas out to you in case things happen to start moving fast, in case we happen to get some additional sell signals or breakdowns in the coming days to weeks here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.